India just froze $576 million of Jane Street cash and banned the firm from its markets completely. Regulators are calling it a textbook pump and dump scam. And of course, Jane Street is saying that it was just, regular arbitrage. Who's right? Which story actually holds water? Let's get into it in this video. We're going to go over kind of what I think happened. Also, we're going to go over what were they actually doing to make money. If SEBI is right, again, that's the regulatory body for the Indian stock market. Millions of retail traders were basically baited in by this pump and dump scheme that they were running. Again, I'm going to go over how they were doing this and what they were doing. So who is Jane Street? Jane Street's just a prop shop born in the year 2000. They're very famous for market making, specifically ETF market making. Today, it's around $17 billion of daily turnover across everything from treasuries to crypto. They trade a lot of emerging markets, let's say India, stuff like that. Quickly go into the timeline here. Basically, February 2025, the regulatory body for the India Stock Exchange emails Jane Street and says, your expiry day flows look aggressive. Again, when either futures or options are expiring. And then July 3rd, 2025, they drop a 105-page interim order. It's just a big-ass document freezing their ass, freezes the $567 million, and issues a nationwide trading ban. And then just recently, Jane Street did file for appeal. That was the 9th. So let's go into what I think was the most interesting step, the trade step-by-step. So this is just what the regulatory body said. They say the play ran in 3 beats, repeated 62 times on expiry days. So what they would do in the morning, Jane Street would buy basically a crap load of bank stocks plus futures. So what are they doing? Nudging the index up about 1%, wanting people to kind of chase the market. So I wrote this down here. Options flip. When calls get pricey, Jane sells a mountain of calls and buys cheap puts. So basically short delta, short gamma, 6 to 8 times the size of the equity exposure. So what does that mean? Basically, they run up the index and then they sell a bunch of calls because people start buying calls when the index goes up, right? They think it's going to continue, like a momentum play. They start getting bullish. And then they also open a crap load of puts. And if you're running an arbitrage or a market making strategy, you would expect this to be 1-to-1, but it's not. It was widely different, which is kind of the problem that they have with what they were doing. So what it looks like they were doing is just kind of becoming the flow, the toxic flow, jamming the market up in one direction, getting everyone to chase, and then basically dumping it back down. And they don't even care if that equity position makes money, right? The initial run up and then the dump that they're doing. All they really cared about is the options that they were doing, because they were exposed 6 to 8 times leveraged 6 to 8 times the size of the equity exposure. So they're basically making money hand over fist on whatever they lost, kind of bullying the market around. So on 17th of January 2024, SEBI says Jane Street lost 62 crore. I think that's the Indian currency, correct me if I'm wrong, but made 735 crore on options, net win, 670. Basically, they're losing on the pump and dump scheme, but they're way gaining on kind of manipulating the retail flow and kind of what people think is going on in the market. All right, so let's just go over kind of the next steps. Jane Street ban is temporary, so we'll see if they are found guilty, quote unquote. But it kind of sets the precedence for, can Jane Street push the market around and kind of make money because of that. And I kind of want to end this video on a crypto story. There's an old document from crypto. I think it was about someone controlling Doge, where they had a huge supply of money. And they were basically pushing Doge around. And what they would do, like let's say the market would form a range, they would break it out of the range themselves and actually bait people in thinking that it's breaking out. And he's doing this with his own money, right? So people start chasing. Then he starts shorting up here, and then he basically initiates the dump on the other side with either spot or perpetual futures, and he was basically running the market. This is when the market was a little bit thinner. I mean, it's still thin on these altcoins. You could definitely do this, but this is like an example of what they did in the Indian Stock Exchange. And if you weren't kind of following, I want to go over it one more time. Again, they're bidding up the exchange in the morning hours. Then when everyone's bullish and puts are extremely cheap, they're buying a crap load of them up here, and they're also selling calls, right? So they're going to get all that premium because they know they're going to expire worthless because they're going to kill the price. And they're going to expire today because it's expiry day, which is what they were doing it on. So they push it up. And then around mid-afternoon, at the end of the day, they just fully retrace that whole move. And then they would make a killing. They wouldn't make a lot of money on their actual, money moving the market, but the actual futures exposure, the actual options exposure would make them money hand over fist. So if you guys have any more questions, leave them in the comments, but I just want to go over that. I thought it's an interesting story to go over.